So you're welcome, guys. What we're going to do is to just look at the trades I've given, the setup. We look at them and we find out the reason why they are posted that way, and we see the reactions. Okay, this is the best way to learn as far as the market is concerned. Yeah. So what we're going to do now is we pick them one after the other. Let's pick Euro JPY. Let's go and check how it was on Telegram. Euro JPY. You can see Euro JPY here. We projected that it will push up from here before it drop. Okay, that is on EURGBP, rather on daily time frame. So we'll go back to the chart, we'll check the daily time frame is 4 hours. Daily, look at daily here. Okay, from here we projected upside, right? Why did you project upside here? If you look at a much higher time frame than daily time frame, you will agree with me that this pair is right at the top. Okay, top, and look at it here. Liquidity sweep here, drop down. After liquidity sweep, if the market breaks down, pull back, what are you expecting? Downside again. This is on a weekly time frame, a much higher time frame than daily. So we're expecting it to go down. And if you look at this pair fundamentally, you will see that Euro is with interest rate of 2.15 or so, and then GBP has interest rate of 3.75. So if you look at their interest rate differential, it's so enormous that you expect that this pair should trend. So investors want to hold GBP and sell off what? Euro. Okay, so that's it. That's why Euro should fall against the GBP. But then, if you say Euro should fall against the GBP, which investor will come and start selling from here? We start selling from here. Nobody. That was why I now gave that forecast that nobody is ready to sell at this level. So we need what? A push up. A push up. And after that push up, we now need a drop down. Okay, that push up is over here. And even if we had to trade this push up, we could trade it. Go to lower time frame, maybe 15 or so. You see how you should have easily, I did not trade it, but this is how you should have traded it from this level. This market goes like this, it's still in a downtrend. Can you see? Still in a downtrend. Can you see? Still in a downtrend. Break structure. This is the first time it breaks structure. And when a market breaks structure, it creates demand. If it's a bullish market, when it breaks structure, it creates what? Demand. And then study how it comes down to this level of demand. Can you see? Boom. At what time? 7:30, 8 o'clock. This is London session. And this pair is a London pair. Therefore, at this level, should have gone with a buy. Stop loss below here. And then TP upside as we projected. This is how you should have made the buy, right? So why did I say this level is enough for the sell? Why did you forecast the sell? Okay, now look at it. If we're going upside, we made a corrective structure, and this refused to break structure. Can you see? It refused to break structure. So if you refuse to break structure, and drop, automatically this become a valid supply zone. Okay, so right now you have this move as your impulse. Okay, you have that move as your impulse. Now, where is the correction? Where is the correction to that level? This is a valid correction, up and up. This is a valid correction for what? For downside. What time is this? 2 a.m. Are you getting it now? 2 a.m. And if you go to lower time frame, let's check it where. What time is this? It's mitigating at 2 a.m. Is this a pair that's supposed to mitigate at 2 a.m. Tokyo session? Is this pair supposed to mitigate at a Tokyo session? No way.
No, sir.
So that suggested to us that this pair that's supposed to mitigate at its own session is mitigating at another session where liquidity is low for it. So that gave me the impression that this move to the downside is not the real move. It's not the real move. And it was not surprising for us to now get it what? Correctively to the downside. So when you get something 3 push up, 3 push down, expect another one to either break this top or not. It's not compulsory. Expect it to come up here. So when it comes up here, corrective structure is over. Then you can do the downside. Okay? That was why I told you at this level, it is enough. You can trade the downside. Do you get it now? And if you go to 15 minutes, you will see it clearly. You will see it clearly. 15 minutes time frame. Look at it. Look at it. Look at your RSI. Look at your MACD. You can use any of the two. Okay? You see this? Higher high here, higher high here. Look at it. High. Here. Is it making a higher high here on the indicator? On this one? Is it making a higher high here? Hello? Can you see?
Yeah.
It's not making a higher high. It's dropping.
Yeah, it's not. Yes.
This one is making a higher high here. It's dropping here. It's dropping.
Exactly.
So because of that, we now see that this move to the upside is over. All we just want is an impulse to the downside, pull back, we enter the trade. And right here, we got our impulse, pull back, enter the trade, straight to the downside. All right, stop loss anywhere up here, not necessarily at this point. You are putting your stop loss here, you are putting it at you are putting it along the fire line. You know fire line? When you go to war and you see some soldiers at the front, you know, hitting themselves. You now put your life in between the two. Put your life in between the two. The fire might touch you. So you extend your stop loss a little bit upside here and calculate your risk accordingly. And then when you break even, just leave it. Just leave it. That's how all this my forecast can work for you. That's how it can work for you. So once you just enter, break even. If you push here, close half of the position and allow the remaining one to keep going. Do you understand now? Allow the remaining one to keep going. That's how to do it. That is for Euro GBP. Then let's look for another one. We'll also talk of Euro. We'll talk of this one. This is Euro. No, it's Euro GBP. We'll talk of let's look for another one. GBP AUD or GBP AUD. Let's look for GBP AUD. Where is it? It's like I made mistake in this post. I posted it this Euro GBP with this one. I'm going to amend it. Guys. Oh, all right. I'm going to correct it later. let's look for which one? Let's look for this one. Okay, this is a British pound Australia dollar. All right, I enter right here. I enter this trade right here. Why did I enter right here? Because I'm going to go to the chart and show you. You have a bearish market. Now, whenever you have a bearish market, listen to me very well. If you have the first leg like this, very impulsive, but did not break structure, expect it to form a correction here. Once it forms correction inside this corrective structure, allow another push to go and break this top to catch liquidity. Once you break this top, you have a valid and complete corrective structure for this downside. This is what I've just done here. Do you understand? So, but when I enter here, it was in the 9th. But I allowed it to break down. Give another corrective structure here, the same method here. And I told you to enter here. Everybody enter here. Boom. To the downside. Okay? But let's go to the chart and see the thought process behind AUD, USD, GBP, AUD rather. Let's go back to the chart. Now, if you go to the chart, go to the chart. Where is it here? This one. Okay. So if you look at it, higher time frame, if you look at it, this is a pair that structurally on a weekly time frame, structurally, minimally, it should get here. If you want to go to the upside, it should get here before it goes to the upside. Yes, minimally, it should come here. But I'm even telling you that the possibility of it to even go as far as breaking this low, breaking this low is there. But minimally, to take it one step at a time, it should get here, down here. So if we are expecting downside for GBP AUD, then on the daily time frame, what are we seeing? I just told you something now, that whenever you are going bearish, for instance, and all at a sudden you just have a bullish move like this, don't panic. Don't panic. If this bullish move did not break structure, this is a structure. It doesn't even come near. If it doesn't break this structure, what we expect is that the bullish move to form a 3 move here. It can break it. It cannot stop here. Anything can happen. Just leave it. Once it forms it, the next thing you are expecting is that this move here should appear here. Once it appears here, it should break here or not. If you break here, fantastic. There's a name we call it. If you do Elliott wave theory, we call it expanding flat. If it doesn't break here and come here, you call it what? A running flat. So, but what will determine whether it will stop here or it will get here is the time it's getting to this level. If it's getting to this level at London session, then you look for confirmation. If it passes it and breaks off at New York or overlap, you also take. But look at the wave we are trading. This is the wave we are trading, because we cannot leave it. Because what if it continues to go downside? What if it continues to go? So that we cannot leave it. Ordinarily, this is a B wave. It's usually very slow. B wave is usually very, very slow. But we cannot leave it because it could be going like this. All right. So now, so we're here on Monday. On Monday, we're at this level. We're at this level here. At this level, we expected a move to the upside. Now let's check the structure on 4 hours. On 4 hours. Remember, we wanted to go downside. Already weekend, we already have this move to the downside. All right. What did I just teach you now? Anytime you now see a powerful move like this, in as much as that move did not break structure here, it is still part of the sell structure. Don't disturb yourself and say buy has come. No, I said 3 moves will follow. Can you see? And the next move, this one should appear here to break this high. Boom. That's exactly what happened here. At this point, the corrective structure for this impulse to the downside is over, and we need to have a sell. Okay, now go to lower time frame and see your sell. Can you see? Like myself, I got involved right here, right here, right here. Why did I get involved? I knew this was the protected high. Boom. And then as we had a protected high here, and market jump right from here to this level, to my level, and close on 1 hour time frame with engulfing candle. So I knew market had nowhere to go here, but I put my stop loss up here and I extended my TP down. Can you see? And then the next day, what do you see? Market made the first impulse, boom, 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 expanding flat there. And then what do you see? Engulfing at the end of the expanding flat. At this level, I told you, get involved, sell, but I extended my stop loss above, not immediately the impulse was made. I can't put my life on the line there. All right. And then you extend to the downside, but we close somewhere here. We close very early because I expected I had the possibility of this one coming up before we drop, and I didn't want to lose my profit. So I had to close early. But can you see how it has proceeded to the downside? You ask me, what else do I want? What else do I want from this pair if I have to get involved? If this move to the upside will happen before we drop, you are going to see it from here, from the downside here. Two things will happen. It will either come, play, and break this low. There is liquidity below here. All right. If it breaks this low and I have a push up corrective structure, I will buy it. What is the target? To break this top or anywhere here or this top here. And as soon as I buy it and I get to this top here, what will I do again? I will look for sell. I will look for sell again to the downside. That is why this is what we use to give you wave by wave, push by push, how the market will behave. And you now begin to see them working accordingly. All right. And then if this move to the upside will not happen, if that move will not happen, what you are going to see is that you are going to see a corrective structure here that is equivalent to this one. You are going to see it here, a bigger corrective structure here for another push to the downside. Okay, let me draw it well for you. You can see something like this. You can see something like this, back to the downside. You know, as you see this corrective structure here, when it's pushing to the downside, it's going to break this low because it's coming with a force and it's not going to reverse from here. But if this one is coming gently, there is no force which wish to break this low. So any force that comes here is to what? Is to take this pair to the upside. So this is how to watch out for the one that will give you continuation or the one that will give you a reversal. But for me, I would love a situation where this pair comes back right at the top, for us to ride it down to the downside. This ride, I can bet it with you. If you have $1,000 and you risk $50, you will get another $1,000 on this one. If you know how to hold it, you have $1,000, you risk $50, which is 5% of your account. You will get 100% of your account on this trade. If it happens like this, 100% of your account, and it can't take up to 1 month. Okay, so it's not all your trade that you'll be closing. When you have a direction that is very clear like this, all right, if you have a direction that is very clear like this, if you're able to secure entry at a very good spot, You don't need to close all your position. You can just close maybe 60% and leave 30%. Allow that 30% to be going. At the end of the day, if it goes well and does not hit your break even, that 30% can make ×2 of what you close, of the 70% you closed before. These are part of the stuffs that many of us are missing in trade management. You just close your position and close everything. And usually you hear me saying, I'm closing half of my position. I will leave the remaining half. Sometimes the remaining half will come and hit break even. Sometimes the remaining half will go and will surpass your TP and give you massive profit. These are some of the things you do to create a shock absorber for your losses. Do you understand? All right. We also talk of Euro AUD. Say they were the same, that you should just take one. Okay, Euro AUD. Can you see the same structure? The same structure, breakdown. Can you see? Can you see? Up to take this high. That's your trade. This thing still has some room. Still has some room to the downside. We are still going to be trading it to the downside. All right. So, but before we consider that, look at it. Look at the structure. Bearish. Go to weekly. Can you see? It has to break this low. It has to break them for this structure to make sense for any upside. All right. So we still have a lot of low to break. Now, if you look at the structure, you can't trade without structure. You have to allow structure to develop on a fairly high time frame before you have confidence in the direction. Now, I know on daily and weekly time frame, I am bearish. But do I have structure right now to trade the bearish move? No. I had the structure here, but I don't have it here. So what can happen for me to participate here is if I have something like this, I have something like this. Correct. Bigger correction equal to this one. I'll be happy to now start looking for sell from here. Where am I? Where's my target? Boom. To low here. Do you see how you trade now? So you don't just go straight to 15 minutes here and you want to get involved here. Right now, I don't understand what is happening here. Honestly, I do not understand what is happening here. I don't. It's none of my business. It's just making noise. All right. Before I will know what is happening here, I must see structure on maybe 1 hour, maybe 4 hours, or daily or anything. See my structure. I must see my structure. See my structure here. If I see this structure here, then I'll look for sell to the downside. And recall that for you to confirm that this structure is good, it must come here at a time that the volume is very high. Maybe look at the pair, Euro AUD. Euro is Euro pair, European session pair, overlap pair. Okay, overlap currency rather. And AUD is what? Is Tokyo currency. So either of the two currency can move this pair. So if it is Euro that want to engineer a move, then the mitigation at this level will happen in European session or New York session. But if this move to mitigate here is to be engineered by AUD, then it will not mitigate at European session or New York session. Rather, it will mitigate at when? At Tokyo session. So these are some of the intricacies involved in technical analysis that many people do not apply, but you need to be applying it. So those are the things that make us to have confidence that our mitigation is a fantastic one. And whatever structure we get to the downside here, we will take it with confidence and the market will push in our favor. Is that okay now? So we also talk about BTC. Unfortunately, the BTC is gone. It's so painful, but there is nothing we can do about it. All right. If you look at weekly time frame, right here, we are not ready to sell. We want to push up. We want this to push up. Okay. Our direction is certain. We need structure. Okay. We need structure. So right here, we got our structure. We got our structure, push up, pull back, we get our structure here. Okay, all this one, if you do Elliott wave theory a bit, you see that this is expanding flat. So this is the level. And then how do you confirm this level? Do you know that if you do your structure very well on the lower time frame, if you take it to daily time frame, it will coincide with the daily level. You can test with this one. If you want to test, you can test with it. If you switch this pair to daily time frame, what do you see here? Daily level. If you do your structure very well, your price will always be mitigating at a daily level. Okay? And what time did it mitigate here? Look at the time here. Can you see? London session, 10 o'clock. So if you go to 15 minutes time frame to look for entry, you will see that it gave us clear entry. Clear entry. This was one of the massive trade. You know, remember I was telling you that this market will be doing like this. We'll 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 be doing like this until you push up. Correction. Enter. Who remember I said so? Is there anybody who still remember I said so? Or mute yourself. Correct. I told you that's how it will behave. It will come down. But look at how we will spot when that push down is over. You're going to use divergence. This is what is called an ending structure. Okay, an ending structure. And you know, in your divergence, you can either use RSI or MACD. They give the same result. Let's test it. You see it here, see here, you see here. You see here, higher high. You see here, higher high. Higher high again, higher high again. Are they not giving the same result? Are they not giving the same result? The same result. So yeah, if you like, you use MACD for your divergence. If you like, you use RSI. So now look at it here. Look at it here. One characteristic of an ending structure is that it gives divergence. Look at it. Up, lower low, low, higher low. Lower low again, higher low again. Can you see? Any impulse you see, the correction is your trade. Any impulse you see, the correction is this an impulse? No. Is this one correct? So because this is not an impulse, we cannot enter the trade here. Even though there was divergence between this move and this move, we cannot enter the trade here, as we cannot call this one an impulse. Do you understand now? Now look at it. There is divergence between this push down and this push down. Look at it here. Is this an impulse?
Yes, sir.
Correct. That is why you could take this one here. And for some people, they could wait to allow this one to break this level here. This is the supply that create the last move. Break it, pull back before they enter. Anyone that is cool for you. Do you understand now? This is how we got this move to the upside on BTC. But you will now see how we failed to catch this move. This one here, we failed to catch it. Why? Look at it. On the 4 hours time frame, we expected this market to make a pullback down to this level. This is what corresponds to our daily level. If you switch to daily time frame, you see that that's where our daily level is. Can you see? Daily level. Come down here. Okay? Now, that was our expectation. But what did the market do? Though we did not study timing very well, otherwise we could have known that at New York session, it was going to push to the downside. Because this structure, what is required of this structure is just to break this low. Once you break that low, it has right to move. Liquidity has been grabbed. Okay? So, but if it came to this level, look at how we will have caught it. All right? Look at it. Break here, pull back. That's our trade. That's our trade. It was supposed to be like this, but stop loss down here. Boom. This will have been close to 1 to 3 risk to reward. Do you understand? So this is how it happens. And also gold. And remember, they did not come down to the area because of the opening of the Strait of Hormuz. All right, market has to push up. It has to push up to respond to the news. So that was why it did not come to our level. Are we okay now? Do we understand now? So look at this one. On weekly, I've given you this setup. I've told you that it was going to push up. You can see here. Let's see the telegram. Let's see telegram. Can you see right here? You see gold right here. Can you see? From tomorrow or Wednesday, we should see confirmation to start buying gold. Can you see the structure here? You see the structure there? All right. So now see it from our chart. See where it is right now. Each perfect forecast right here. Can you see where it is? And we'll still be going to the upside until we take this top. Okay. So all you are required to do now is to be looking for corrective structure. Okay. Look for your pullback. Impulse, you have the pullback. Impulse, you have the pullback. Impulse, you have the pullback. Impulse, you expected another pullback here to go another impulse. Okay? But each of your correction must get to the right level before you can have confidence in the setup. In this case here, we expected the level to be here. Wanted it to be here. So that from this level, we look for buy setup to the upside. But unfortunately, it did not come down to that level before that announcement of opening of Strait of Hormuz. And then the market make a rocket to the upside. Otherwise, what we'll have caught will have been simple. We'll have caught this one. We'll have caught it here. Impulse, pullback, enter or entry rather. Boom. Stop loss here. Up we go. We'll have caught it. Okay. So and a lot like that. And I think I gave one other setup. So any question, guys? Any question, guys? Do we have any question? Okay. So what I want you to do now is you go back to your chart. Just look at how I've done my analysis. Look at how I've done my forecasting, and then keep doing yours like that. All right, keep doing yours like that. Okay, if you have any question, feel free to message me and let me know. Have a great weekend, guys. Bye-bye.
Thank you, sir. I really appreciate it.
Yeah.